Now let me introduce practical questions. Suppose A starts business with cash rupees 5,000 on 1st April 2012, and during the year, I mean to say transaction number 2, A purchased goods for rupees 1,000, and transaction number 3, A sold goods costing rupees 1,000 for rupees 2,000, and during the year, I mean to say from 1st April 2012 to 31st March 2013, these 3 transactions were made. And now you have to prepare accounting equation. Now let me introduce how to make the format of accounting equations. Draw a T. Now you will find 2 blocks, one block on left side and one block on right side. Now draw one more parallel line to the top horizontal line. So draw one more vertical line in the left block. Now you will find 2 blocks are there. First one will be called capital and the second one will be called liabilities. Now come on right hand side. Let's draw one more line. I mean to say vertical line. Now this right block will be divided into 2 blocks. I mean to say vertical blocks, and the first one is cash and the second one is goods. So first transaction is A starts business with cash rupees 5,000. So when A starts business with cash, what it means? A brings cash of rupees 5,000 and gives it to the firm. So in this way, the firm has got the cash of rupees 5,000 and cash is the asset of the firm. So on asset side, in the cash column, write down rupees 5,000. And on liability side, write down rupees 5,000 in the column of capital. It means in the business now the capital is rupees 5,000 and the liability 0 and the cash is rupees 5,000 and goods 0. So 5,000 is equal to 5,000. This is the accounting equation. You know, accounting equation means capital plus liability is equal to assets. So in this transaction, capital is equal to total assets. Now let's move to the second transaction. And the second transaction is A purchased goods for rupees 1,000. So what will happen with this transaction? The firm had got 5,000 rupees. If the goods are purchased for cash for rupees 1,000, there will be decrease in the cash. Previously the firm has got 5,000. Now it has paid rupees 1,000 out of the cash box. Now in the cash box of the shop is only rupees 4,000. So 5,000 minus 1,000, 4,000. And in the goods column, please write down plus 1,000 because previously, before this transaction, there were no goods in the firm. But now the firm has got rupees 1,000 as goods. So there will be no effect on capital. There will be no effect on liability if you buy the goods. So in this way, the capital is rupees 5,000, the liability is 0, the cash is rupees 4,000 and the goods are rupees 1,000. When you have completed second transaction, please draw a horizontal line to make it separate from the results. Now let's move to the third transaction. The third transaction is A sold goods costing rupees 1,000 for rupees 2,000. You know, the firm had got goods of rupees 1,000. The whole of the goods have been sold for rupees 2,000. So one thing is clear, the firm has made a profit of rupees 1,000 because the costing was only rupees 1,000 but the selling price is rupees 2,000. You know, this is the business. the goods are bought at cheaper price and the same goods are sold at the higher price to the customer. So this firm has done the same thing. So what will happen if the goods are sold at profit? Capital 5,000 plus 1,000 is equal to 6,000. So draw a horizontal line for this transaction. So 5,000 plus 1,000 is equal to 6,000. Liability 0, no effect. But in the cash column, I mean to say on asset side, on right hand side, previously the cash was 4,000. Now the firm has got rupees 2,000 cash because the firm has sold goods for rupees 2,000. So previously the cash was 4,000 plus 2,000 equal to 6,000. Means now the firm has got rupees 6,000 as cash in the cash box of the shop. And goods, previously it was 1,000, now it has gone out. So 1,000 minus 1,000, that is nil. It means at this moment the firm has no goods and it is 0 now. So what is the new equation now? Capital 6,000 plus liability 0 is equal to assets in the form of cash 6,000, in the form of goods 0. So 6,000 is equal to 6,000. In this situation, one thing more I would like to bring in your notice, that there is never ever change in the capital. I mean to say there will be no increase, no decrease, except if there is fresh capital, then there will be increase in the capital. I mean to say if the owner brings some more cash or asset to the business or to his shop, whatever it is, then it will be called fresh capital and the capital will be increased. Or if there is any profit, if the firm makes any profit in any form, that will be added to the capital. Recently you have seen in the question that the goods costing rupees 1,000 were sold for rupees 2,000. In this way, the firm made a profit of rupees 1,000 and we increased the capital by rupees 1,000. So capital is increased only due to two situations. Either it should be fresh capital or it should be profit. In the same way, the capital can be decreased, can be reduced only due to two situations. Either there should be some loss or there should be some drawings. Drawings means when the owner takes out any cash or any asset of the firm for his personal use. That is called drawings. One thing more, I would like to introduce new term you will find in the future questions, that A introduced capital in cash. What it means? It means A brought his cash from his home and gave it to the shop or his firm, and he has put the cash in the box of the firm. When he introduces the capital, means when he brings cash from his home to the firm, and after that, that cash belongs to the firm. It doesn't belong to the owner anymore. This is the concept of the accountancy, and that concept is called separate entity concept. Means the firm has got separate entity and the owner has got separate entity. When A starts business and introduces as capital, it means A, the owner, brings cash from his home and gives it to the firm, and the firm keeps the cash in the cash box. Then this cash belongs to the firm, not the owner. And I was recently using the word transaction. Means any event, any incident, any give and take in the firm is called transaction if it has got any money value. For example, A is not well today and he is not able to go to the shop. Naturally, there will be a loss for the shop because the shop will remain closed for the whole day. This is the incident, but you cannot calculate the exact money value. So this transaction or this incident or this event will not be called transaction. Now let me introduce the meaning of drawings again. Means money withdrawn from the business for personal use, that is called drawing. For example, you are running a bookshop and the name of the bookshop is Classic Bookshop. And today in the evening, when you close your shop, you want to go to celebrate the evening somewhere with your friends, and you take 5,000 rupees from your cash box and go out. This 5,000 has been taken by you, I mean to say by the owner from the shop for personal use. This 5,000 rupees will be called drawings.